Good morning. I will give folks an opportunity to enter here. Not a ton to discuss. We do have claims here in a couple of minutes. Sort of rinse and repeat the same few days. Oil up, bond yields up. Overnight, not a ton of data. Did get a couple of bond-friendly inflation numbers, a couple other not so bond-friendly numbers. Either way, overnight was pretty much a neutral. Asian stocks up, everybody else pretty much down. Europe, we're indicating down a half a point to a point here onshore. VIX way up 9%. Both Brent and crude up 90. I mean, gosh, you're talking oil is up almost 50% in a week or so. We were at 60 on crude. To be at 90 today, pretty darn crazy. Most metals down on the day. Dollar mostly up, maybe flat here and there. Bonds don't love any of it. As you might imagine, Bitcoin off a little bit. Let's see where MBS is. Maybe 5 ticks worse. Sixes and 6.5s are sort of joining the party, so to speak. Just really across the board, nothing great to talk at. We are at May 19th support right here and potentially have broken through it. So we're as we sit here this morning, basically at 3-month, 6-month worst levels. And so, where do we go for here? Really, next support, you're talking July 16th. I talk about calendars, folks. You want to talk about an interesting chart. July 21st, so 16 was sort of the last low, but July 21st, just because it sort of correlates to July 22nd, Ginny 5.5s were at 99.11. We are sitting here at 99.19. I'm sorry, that was the 15th. Excuse me. So actually, we do July 23rd. July 23rd, we were at 99.21. We are at 99.17. How is that? How does that work, right? How is that possible that a year to the day, everything that we've covered, all the ground, September refi boom is coming. Iran, in February, inflation exploding. No, inflation in check, and all in between. Here we are at, give or take, the same darn level a year to the day. So what's the good news? The good news is what came after that. So that was, by August 6th, we were at, call it par 12, 100 basis points better than here. And by September 5th, we were almost 200 basis points better than here. Now, listen, we have this variable of Iran this year that we did not have last year. Over the last few months, I've sort of mentioned almost on a daily basis that these next 60 days tend to be very fertile ground for lower interest rates on a calendar basis. I'm not the only one that looks at this chart. And, oftentimes things become a self-fulfilling prophecy, right? Because history has a tendency to repeat itself. And so, the $1 million question really becomes, and we've got this data here at 8:30, I'll get to in a second, are we going to repeat ourselves here from basically this day forward? It's going to be interesting. Wow, this is not going to help. Jobless claims print at 187. Where the heck did that come from? Continuing claims 1796. Both beats. Last week revised up, continuing revised down. 470 on tens. Was not necessarily expecting that little dose of bad news. Definitely a punch to the gut. I mean, fives are at 97 and change. I mean, we're almost looking at a 96 handle. You have to go back to June 10th of last year. Boy, and you know, it's oil. It's just oil, and that's all anybody wants to talk about. And I am just hard pressed to look at where we stood 13 months ago, right? And where we stand today, and ultimately feel better about the economy today than I did then, because I don't think anybody does. And after we get through all of this noise, ultimately, the consumer is what's going to drive Fed action, right? Now, by the way, I mean, we could sort of digress on the Fed drives Fed action, or the Treasury, or, you know, maybe the Fed with the Treasury in terms of printing money and stimulus, right? You know, I've said this a million times, Sir Milton Friedman, only the government creates inflation, right? By printing money and creating leverage. But let's see, non-farm, July 2025. What did it print? So 73,000. What did June print? June 2025. So June 2020, because July hasn't happened yet, right? Although I'm not sure what they're looking at. Is it? Yeah, because this is June of 25, which would have printed in July. So the report that we just got, we printed 147 jobs. So, you know, turn back the clock, and we were sitting here on July 23rd, 2025, realizing a job print of 147. Okay, this June we printed 57. Call it 100,000 fewer jobs. It's different. It's different, right? Just out of curiosity, June 2025 CPI. 2.7 and a monthly of 0.3. I think our monthly was negative 0.1, something like that. Might have been flat. Core printed 2.9 with a 0.2 increase, right? And let's just see CPI chart. Let's look at a CPI chart of the last 12 months, if I can. To a 3-year. And we were at, so June printed 322. We're at 332. And where was the 10-year? July 2025 10-year yield. 439. So we're 30 basis points higher in yields today than we were a year ago on 10s. And we are ballpark, right, in the same spot from a CPI standpoint, trending better versus trending worse, driven And I think the consensus can really be almost exclusively by the price of gas. Um, listen, the bet is how long is this going to last? And I mean, heck, I'll be the first one to say I'm on the wrong side of that. I thought this thing would be over in March, right? I don't know what's going on, what we're messing around with. Iran bombed some Saudi oil tankers. I mean, I have to tell you that I would think that the consensus is that most of the states in the Middle East are on our side, if not all. They're starting, I think, to piss more people off than just the United States. You got to believe that equates to being kind of short, or as maybe the nomenclature might say, they're not really long on this war. I don't know why we just don't put our foot down once and for all. And I think that part of Hegseth looking for extra money and the whole posturing of like reopening a war or what have you, and getting, certain permissions and controls from Congress, So we'll see. I will say, getting back to the tables clearly has stalled, and until we get to some degree of positivity, I think it's going to be a little bit painful here. So what do you do? I mean, I've just kept reiterating that we are on a day-to-day lock, basis, and the risk that you're taking is just that we're not going to break resistance, and or I should say support, and we've broken support a couple times because there's just we've yet to get a night of relief in the Middle East. Sixes, as I say, have finally sort of joined the party. So, where do we stand here? Well, on a 3-month chart, sixes are kind of mid-board. We were here on June 8th. So it's not like we haven't been here before and in the fairly recent past. We're only maybe 20, 30 basis points behind kind of cruising levels, but we're certainly 50 behind the hot levels that were full on lock. Broken record. You should have been locked up for July, like I've been saying. And if you're not, I don't know what the point of locking here is anyway, right? So, certainly down in coupon, you're going for the ride, hang on tight. I think hopefully you've been smart about your rate lock assumptions as we've preached here. So, as always, thanks for joining live. Thanks for watching on replay. I will see you guys tomorrow. Bulls and Bears make money, pigs get slaughtered. Have a great day.